I've been Reppond. Welcome to my YouTube broadcast. Today is June 4th, 2025. I'll give you my slides on my what I call market insights, and I'll begin with the dashboards. This is the overview of three different aspects to the market. One, the four major U.S. indexes, the Dow, the NASDAQ, the S&P 500, and the Russell 2000 Small Cap Index, all illustrated by their ETFs in the far left column. Also, the two developed markets and the underdeveloped markets, EFA and EEM, and then the long-term government bond. So three different perspectives on the market, 6 total equity and 1 bond. The yellow box tells us what happened last week with all 7 of these. So the one that way underperformed was the emerging markets. All the others were positive. The pink box shows a range of positive, which is the developed markets, EFA, all the way down to the Russell 2000 Small Cap Index, IWM, a range of 17% positive to 7% negative in 5 months. That's a lot. So, to the right of that are the green dots or red dots. Those indicate if that ETF or that index is above or below its moving average. There were 6 negative out of 28, so that means 22 were positive compared to 20 the previous week. And so again, when you look at it on that perspective, not a bad set of market conditions. When you take the S&P 500 and break it apart to its 11 component parts, the 11 sectors, major industry sectors, those are illustrated for last week in the yellow box. There were 2 negative, barely negative, and those were telecommunication and energy. On a year-to-date basis, again, a big range from 8% positive on industrials, that's more of a value index, and all the way down to energy, actually the last 3, retail, consumer discretionary, and energy, all 3 quite negative. So 8% all the way down to -4. And energy is below all 4 of its moving averages. And by the way, healthcare is also below all 4 of its moving averages. The S&P 500, this is what a weekly chart looks like for the last 3 years. Beginning with kind of the bottom of where it was as far as the S&P, October of 2022 through last Friday, the last week, is that little tick up at the far upper right. That's an indication of what happened last week for the S&P 500. So it has come off of its bottom, short-term bottom of April 7th. What is that, about almost 2 months ago, up to today, a pretty swift rebound. So it looks like it's probably headed up from here, but I try to stay away from predictions, so I won't predict that. It's just when something rallies that quickly, it's a sharp decline and a sharp rebound. It looks like it's going up. The same chart, when we put it on a candlestick basis, this shows you, if you follow candlesticks, this shows you the degree of movement up, same thing from where it was. So then when I take that candlestick chart, 3 years, and compress it down to a 3-month period, this is what this looks like. So this would be kind of late February, I guess, last day or 2 of February to present. And so you can see where the bottom was. It just magnifies it. And this is a daily chart, not a weekly chart. So you can see what that looks like. A lot of days were hollow candlesticks, which means positive, still above its 20-day moving average. On a relative strength basis, when I compare the NASDAQ 100 to the S&P 500, the tech-heavy NASDAQ 100 to the broader market, numerator NASDAQ 100, denominator S&P 500, it has been kind of a sideways pattern for the last couple of years. When it goes up, that favors the NASDAQ 100 growth, and when it goes down, it favors the value index. It's a combination. Value and growth is the S&P 500. Now we look at, same thing, relative strength, growth versus value only. And growth would be NASDAQ 100 type companies, and value would be kind of the old economy type companies, and that clearly favors the growth. Growth meaning the numerator, value denominator. So again, from its bottom in probably, I think it was April 7th, you can see where it shot up, and it shot up pretty much using the NASDAQ 100 as the proxy for growth. S&P 500 relative strength compared to the small cap index, the IWM is the ETF. And you can see from early 2023 to present, it's moved in an upward direction. And including this past week, again, at the very far right, you can see that it's moving up, meaning that large cap is more in favor than small cap. Long-term government bonds, represented by TLT, has been going down for about 5 years in general. There are periods where it goes up and then it just collapses. And what that means is that bond yields are going up. And if they're going up, bond prices are going down. They move inversely correlated. And so using TLT as the indicator, I would not want bonds in my portfolio. And intermediate term bonds are used also quite a bit, and corporate bonds are also used. So there's a lot of bonds out there, but they've all, other than high yield, which are junk bonds, they've all been moving in a downward direction. Since August of 2024, you can see, this is again a shorter period, and looking at it from this perspective, still a weekly chart. This is not daily, but it gives you a feel for where things are on the government bond. This last week was positive. You can see that on the far right, but in general, on a longer term basis and on a shorter term basis, they're still moving in a downward direction. The dollar has been moving down. I put an arrow at the very far right, and you can see that, what the dollar has been doing since the beginning of the year. Gold, been doing very well, moving up since late 2022. This last week was down some. You can see that from a little tick down, but in general, it's still well above its 20-period moving average. Silver, same thing, still above its 20-period moving average. A little bit of pullback this last week, but generally moving in an upward direction. Bitcoin, I'm using BITO as the ETF. It's been moving up with a slight pullback this past week. Volatility index, now this when this comes down, equities are usually going up. And that's what happened this past week. It was more favorable to equities, and that the VIX, volatility index, has moved down all the way down to 18. It was up. This shows a high of 45 on a daily basis, and certainly on an intraday basis, I think it went up above 60. But this doesn't show it that way because it's a weekly line chart. And then I put my mark at 24. So if it's above 24, I consider that moving in a higher risk area, and it's not. It's moving the other direction. U.S. versus South Korea. I show this to illustrate how we're doing compared to foreign markets, and I'm using South Korea as a proxy. This moved down a little bit this past week, which means South Korea was outperforming us. In the past, since late December, it's been moving in a downward direction generally. And so our market, our equity market, compared to South Korea, has weakened since that period, and we're below our 20-period moving average. Okay, so we get to gold and silver. The price of gold, excuse me, as of Friday was $3,289. Excuse me, and silver was $32.98. Both down, one down 2.1, and then silver down 1.6. And the gold-silver ratio is still about 100 to 1. A monster box of silver bullion, just plain generic silver, is $17,440. That's down a little bit from the previous week because of what I just showed you. That, and the price per round is $34.88. This includes the markup, the retail markup of $1.90, whereas the previous data that I showed you on the previous chart was spot price and did not include the markup. And this is from my son Preston, and he's in the precious metal business. And I take this, I share it with you. I always encourage you to buy local if you can, but it gives you a benchmark price. He does sell it. He does sell it to people around the country, but I still say, buy it locally if you can. But there's a price that'll give you an indication of what it's going for as far as he's concerned. Okay, if you have questions or comments, leave them in the comment section below. And thank you for watching.